What's up? What's up? What's up, Facebook? What is going on? It is your boy Big Dre coming at you. Want to make sure that we are started and that we are ready to rock and roll. We are. We got stuff going on. Perfect. Perfect. So we are started now. We are live on Facebook, getting ready to uh, go over our topic for this evening, which should be fun. Pretty excited about it. I hope you guys will be too. We're going to be talking about the fundamentals of Forex and how you get started from the beginning and work your way straight through. So if you're brand new, this will be something that is for you if you're brand new, because this will be information that'll be valuable to you. Hold on one quick second for me, please. There we go. All right, we're back. Sorry about that. The beautiful part of working from home is, and being a single dad is you get to deal with a rambunctious, wonderful, energetic 5-year-old baby girl. So with that being said, I see we got a few people who are on, so we are loaded and locked and ready to go. So let's get started. What we're going to talk to you about today is just, like I said before, is just simply sort of an introduction to Forex, a very, very basic sort of what is your next step, right? You decided, you said, hey, listen, I want to learn Forex, whether you've joined the academy or not, but you've just sort of made the decision and you're like, what do I need? What needs to take place? And then what are some basic steps that I would participate in order to get started with the process of trading? And how can I take advantage of this incredible market? So we're going to be able to do a few of those things today and walk you through some steps. And I'm pretty confident that you will get a lot of value out of it. All right. So let me do one quick thing where I need to add on here. What is going on here? Real quick, I need to add my device because I'm going to be able to show you guys some actual stuff live, which will be helpful because the market is open. All right. So you will be able to see some things live in a second. We're going to add that. All right, so we've got that together, and we'll go from there. Let's see here. Perfect. All right, folks, let's go ahead and get into it. What I'm going to do real quick is I'm going to share a PowerPoint. I am on Zoom, so I will jump in between, back and forth. If people have any comments or questions, I will look to hopefully answer some of those as well. But what we're going to do real quick is share my screen. And like I said, we are going to start you from the very beginning. You just said, hey, I want to be a Forex trader. I want to jump into this space. What is it that I need? So if you're taking some notes, there will be some slides that you can take notes off of. A couple things that I need to address right away is that I am going to show you about the idea of brokers and how you could potentially set up an account with a broker. It needs to be stated that we do not refer any specific brokers to you. Brokers are a personal decision. They are your personal decision, and you can decide on whatever broker you want. There's no mandatory brokers. No one should be sending you broker links or anything of that nature, right? So you can decide which broker you want to choose. Now, when choosing a broker, what I recommend is that your broker has low fees and low spreads. Okay, so that's sort of my recommendation on that part of things. But you get to choose whoever it is that you would want to have as your broker. Second thing is we want to let you guys know that trading Forex does come with a certain amount of risk, as any kind of financial trading does. And the company that I'm attached to, even though this training is not specifically attached to them, but I am attached to IM Mastery Academy as a student of theirs. So I just want to make it clear that this isn't attached to IM Mastery Academy. And secondly, more importantly, is that as the academy itself, is that their function is not to trade for you. but their function is to give you an education on how to trade for yourself. So now that we've gotten that out the way, we could jump into learning, what we're going to share about trading today. So let me go ahead and close this. Let me go ahead, get that one out. All right, and let me go ahead here and minimize this and jump right into sharing my screen. So what we're going to do here, I'm going to jump right in. I'm going to go ahead and share my screen. I will also have the ability to write on the screen a little bit as well, so that you guys can get some ideas. I will occasionally jump down and look at any questions that some people might have. But right now, when I have it in this function right here, it's very difficult for me to see the other option in terms of any questions that might be coming through on Facebook. So I will do my best to navigate both, okay, for those of you who are brand new. So first thing we're going to do right here is we're going to talk about the fact that you need to get a broker, okay? So what a broker does is it's very simple. You're going to, once you've determined which broker you want to use, you're going to be able to fund your brokerage account with your personal money. Now, all brokers are different. Some brokers have a higher amount of money that's required. Some brokers have a lower amount of money that's required, okay? What that requirement is to fund is up to the individual broker. Where you want to fund will be up to you individually. The first thing I'm going to recommend is that when you go to a broker, the very first thing you do on day one before you actually put live money into the market is that you're going to want to create what's called a demo account. So a demo account is going to allow you to mimic live trades. So you could put the same trade in that you would if you were putting it in with your real money, but essentially you're using monopoly money, okay? It's fake money, it's a demo account. It allows you to practice the skill of trading so that you can get good at doing the basics, in particular, entering your trade, modifying your trade, putting your take profit and your stop loss, closing a trade when necessary. It allows you to be able to learn how to do those things safely without putting any of your money at risk. So this particular broker that I'm showing on this slide is Coinexx. Again, there's a variety of them. And what would happen is if you were setting up an account, you would log into Coinexx, you would register yourself, which is just a basic process, just like any website where you register yourself. And then you would go down and you would click demo account. You see the arrow right there for demo account. Now this right here says that you would then create your account on MetaTrader 4 or MT4. And we're going to talk about that in a second, but that is the app that you would want to use, especially if you're using your cell phone as the device in which you're going to trade off of. So you're going to get MetaTrader 4, and then here is sort of the recommended things that we set up. We recommend a 200 leverage. We recommend that you trade in the US dollar. And then the bottom amount here that says 5,000, what that simply is, folks, is that's the amount of money that you would have to trade with, what you're going to fund your demo account with. My recommendation is that you try to get that number as close to what it would be if it was your real account. So in other words, try to get it as close to the amount of money that you would be funding into your real account. Why do we want to do that? Because there's a psychology to trading, okay? There's a mental aspect to trading that's probably more important than understanding the skill of how to put the trade in. And so if you're going to say only be able to fund an account with $500 and you put $5,000 or $50,000 on your demo account, and you will probably be instinctually ready to trade the lot size that would be similar to what you have in your real account. And so you can lose and lose and lose and lose, and it wouldn't make any difference because it's not even going to make a dent in that big, huge demo account that you've created. And so psychologically, there's no emotional tie to the idea that you lost that trade. Now, if it's the same amount of money and you're seeing loss after loss after loss, then the demo account becomes a real educational tool because you can say to yourself, I've got to fix something. I got a leak in my boat, so to speak, right? I got a leak in my boat and I need to figure out where I got to go to plug that leak so that I can stop the leak and we can continue to move forward by going into profit and growing my account, right? So demo is very important. The other problem is if you have so much money and you actually trade the lot size that you should be trading for a $50,000 account when you're only going to put $500 in, is that when you finally get to the point when you're going to trade your live account, when you finally feel comfortable, emotionally you've attached yourself out or onto a $50,000 account and the lot size that comes with it and the amount of money per day or per trade that you can make with that particular lot size. And I know if you're brand new, some of this terminology is new, but we'll go over that as well. And so you don't want to have that problem either, right? Because then when you come back to your real account, you're going to over leverage every time because you're used to getting that a different amount of money per trade. So you want to psychologically, this is a psychological game. You want to have your account match as close as possible, okay, to what it is that you would actually be trading. Now, a lot of them, once you go ahead and click create account, usually it'll send you some kind of page that you'll want to screenshot, and you'll be using that information to enter into your MetaTrader 4 in order to link the app on your phone to your broker. You got to make the two connect. It's like a dating app. Swipe right, right? If you got a match, well, you got to make the two match, right? And once you make a match, then you will be trading in your demo account, okay? So another broker here is one that's HugosWay. People who like to trade on the indices, which is things like US 30, German 30, the S&P 500, the NAS 100, stuff like that. So most people don't know, but you can actually trade the stock market in the foreign exchange market, where it's the US dollar versus these different indices. So an indice like is like the Dow Jones, which is US 30, which is the top 30 companies traded on the Dow or on the stock market at any time, right? And they put them together, and that's the US 30. Then you have the S&P, and you have these different things. And so people like to trade those because when you win considerably more than a regular trade on Forex, but also when you lose considerably more. So the point about that is that you should definitely, if you're going to trade an index and you want to practice that, you definitely want to get some education on it, and you definitely want to get some mentorship on it, because it can be very profitable, but for a new trader, there's the potential that it could also wipe your account out relatively quickly. So we want to make sure that you know that. But HugosWay is a broker that does trade indices. That's why I included them on the example. And so once you've registered yourself, you would go to My Accounts, click Create Account. Then you would select the account type, which would be a demo, right? You would do the same thing. You would put your leverage at 200 and then fund whatever amount you'd want to do. You click Create Account, and then it's going to send you some information, and there you go. So you would be over here, it'll have your demo account number, your trader password, and your investor password. Those top two, the demo account number and the trader password, are what you're going to use when you link it to your MetaTrader 4. All right, I hope that makes sense. Just giving you guys just basics here. This is basics. Again, I just started. What do? I need a broker. Here we go. We just showed you two that you could potentially use. You can look up and get some more. Now, what you're going to need to do is download an app called MetaTrader 4. Now, some people use MetaTrader 5, but most of the trading community uses MetaTrader 4. So that is the one that we highly recommend. And what I have on my screen is an iPhone version. And there is, of course, a version for Android. But what happens here is when you download the app, you're going to see on the left, you'll have a bunch of what these are called currency pairs and numbers. And what you need to do to link that account that you've now set up with your broker to your app on your phone, MetaTrader 4, is you'll go down to Settings. You'll click on Settings. You'll click on New Account. And then here's where it gets people. This is the tricky part that most people get confused on because they have a demo account, right? So they say, oh, I should open a demo account. But the fact is that you want to log into an existing account, okay? So you'll want to log into an existing account. Once you have logged into that, once you've hit that, it's going to take you to this next screen. And then in that search box, you will type the name of your broker. So whatever your broker is, you'll type in the name. In this case, it says Coinexx Live. That is for an account that has real money in it, or Coinexx Demo. You will then click on Coinexx Demo, and at that point, you will enter the information of the login and the password that was sent to you in your email, or if you screenshotted it immediately after you created your account, you will put that information in, and voila, your account will be linked, and you will know that it's linked because it will have the balance that you started with, right? That when you first set up the account, whether it was $500, $1,000, $5,000, whatever that was that you set your account up with at the broker, it will show you as having that balance, and it will show you as being in whatever your broker's name is and a demo account, okay? So again, this is giving you guys the basics. These are the things that you're going to need in order to understand. So now we have MetaTrader 4. We have a broker. We have things set up on our phone. We're keeping it simple right here, okay? Now what you're gonna wanna do is on your laptop, you're gonna wanna go to a website called Tradingview, okay? Tradingview. And what Tradingview does is it's where you're gonna be able to look at the charts, okay? But you're gonna wanna know how to find them and what to do. So on my screen here, when you go to tradingview.com, it's a free site. What happens is in that search bar, instead of having to go into all these different areas, in that search bar, what you will do is you will type in whatever currency pair you're interested in looking at. Now, as a brand new trader, we highly recommend that you focus on a handful of currency pairs, 1 or 2 usually. Some people do a few more, but you want to keep it low so that you can understand the movement of the market, and so that you can understand how that currency pair interacts and moves, and also so that you can learn the functions of how to interact with MetaTrader 4. And you don't want to be jumping around to currency pair to currency pair. So what you'll want to do is you'll want to pick a currency pair. A lot of people like the gold, British pound, Japanese yen. A lot of people like the US dollar versus the Japanese yen. A lot of people like different currency pairs. EUR, which is the euro versus the gold, British pound, right? There's a few different currency pairs. You can decide what it is that you want to look at. But what you'll do is you will type that currency pair in the search bar, and then it's going to pull up a page here. So we see British pound versus Japanese yen. And what will happen is you're going to want to click on the next setting, which says full featured chart all the way on the bottom. Click right there, okay? What that will do is that will open you up to a screen that looks something like this, okay? Except there won't be these candlesticks. The way the chart looks now, each of these different red and green indications of lines going up and down, those are called candles. Initially, it will look like a graph, just one solid line. And so what you'll want to do is you'll want to go to this section right here. Let me see if I can highlight it, make it a little easier, because I know we are on Facebook and some people might not see it, but right in this area right here, you'll want to click on that, and you'll want to come down in the section that says candles, and you'll want to convert your line graph to candles, and it'll immediately look something like this. Why are we doing that? Because that's the way, you know, some traders use different things, but on average, as you're just getting started, most of your charts and most of the things that you look at from anybody that's supporting you or giving you help will be in this format where it's in candlesticks, okay? So candlesticks are important, all right? And so each one of these is considered a candlestick. Now, another interesting thing that we'll give you just now, again, just giving you guys the basics here, right? What you'll see here is that you have in the top left box there, it's probably hard to see on Facebook, I apologize, but you actually have the currency pair, which is the gold, British pound, Japanese yen in this particular case. So that's GBP, gold, British pound, JPY, Japanese yen, okay? Next to it, and this is important, you'll actually have something that says, on that chart, it says 15 minutes or 15M. And why that's important is because that means in this particular case, on this particular currency pair, I am looking at a 15-minute chart. So that means that each one of these candles is 15 minutes in length. Okay, so it's a 15-minute snapshot at what happened in the market on that particular currency pair. 15-minute snapshot on what happened in the market on that currency pair right there. Okay, so that's what you have right there with your candles. Okay, so now you have the basics of, you know where to go, right? Which is, you got Tradingview, you have your broker set up and attached to MetaTrader 4. Okay, and so now you have sort of those basics. You convert it to candlesticks so that you can look at the charts the way most people do. And now you know that you can move between currency, or move between time frames and see a different chart. Now, most people, just giving you free bands here, free nuggets, is most people start at a higher chart, say the daily chart, to understand where and which direction price is really moving on a longer time frame. And then what they'll do is they'll backtrack down to the smaller charts, and what they're looking is, because they took a snapshot of the big view of where price was going, they'll take a snapshot of that and they'll come down to the smaller time frame to find an entry into the market that supports the direction that they see the market moving. Okay, so that's just a little free bands for you. There are also different indicators that you can have. In this case, we use one indicator just to use it as an example. This is not anyway a highly recommended, or you should have this indicator for sure. That's not what it is. I just wanted to be able to show you an indicator and where to find them. So you see on your chart where you had the gold British pound, you had the 15 minutes, you then had the candlesticks, and then right next to it, it says indicators. You'll click on that. And then in the search box, you can type in any indicator that you want. So for those of you who are YouTube heroes, I don't know why you would be, but if you're a YouTube hero, you can go use whatever indication that whatever YouTube video you watch said, you can type that in there. For those of you who are part of the academy and who are getting that formal education, you can go ahead and use the different indicators that some of your educators are using. This is where you find them. So you don't have to bother them about where to get it. You already know on Tradingview, I'm going to go in, I'm going to hit the indicators. I can type the name of the indicator that they're using, and then I can go ahead and add that indicator to my chart. Okay, I can add that indicator to my chart. So in this case, we talked about RSI, which is the relative strength index. You go ahead and put that in, and the RSI is an indicator that's looking, you can see it, and what it does is it gives you an idea of when price might reverse. Okay, so in this case, we have it set at its standard settings where it's 70 and 30, and that generally means that when price is above 70, that is overbought. That means that it's overbought and the sell is potentially getting ready to come. Again, these are all soft indicators, right? Indicators are not nearly as strong as reading price action, understanding the movement of the market, setting up your trend lines, and using all kinds of stuff to help you identify a trade setup without the indicators. And then when you add indicators on, they're just confirmation of what you were already seeing in the market. Okay, and then here, if it drops below, it's called oversold, and you're looking for price to go into a buy. So you can see clearly, if you were lining this up, at this point, we were overbought. It went into a sell. At this point, we were oversold, and it immediately pulled back into a little buy, right? So those types of things are what the indicators are used for. This one right here is just indicating the RSI. Pretty simple, right? Pretty simple. That's just one indicator that you could look to use, okay? So what does Forex mean? So now what I've basically done was just giving you guys a few things that you guys could lock onto. It's It's day one, right? We're not expecting to be experts in the market. We're not expected to be master traders. I hope you have that in your mind that that's not the case. But what we wanted to do is give you, like, I've decided I want to trade. Maybe I've linked up with the academy. What do I do? What are some things that I can do on my own? Well, you can download MetaTrader 4. You can get a broker. You can, we don't necessarily tell you what broker to use, but you can ask people within the academy who they're using and who they find comfortable and why they do, as you help to educate yourself on different brokers. And then you can find your broker. You can set up your demo account, right? If you have more questions beyond what I showed you right here, you can get back with the person who's introduced you to the academy, and they'll walk you through how to set that thing up and get those things connected, because they want to get you trading in your demo account as quickly as possible so that you can actually learn, right? We learn more by doing, that's why they say, like, professional athletes or like, say you're the number 1 or 2 draft pick, they want to get you in the game as quick as possible. They don't want you just sitting on the sidelines, because as you're sitting on the sidelines, you're not really learning, right? You're learning, but it's not the same. It's not expedited. You're not getting tested. There's no linebacker about to hit you if you're a quarterback, or, right? Like, you're not having to read the defenses live, right? So it's the same thing here. Even though you're in the demo account, we want to get you into the market as quickly as possible so that you can begin to understand the ebb and flow. So what does Forex mean? Forex is simple. This is what we do, folks. This is the foreign exchange market. It's simple. It just means that we are changing or trading currency pairs. So it's the foreign exchange market, okay? So here's some examples of currency pairs that you would be able to type into your Tradingview if you wanted to add some currency pairs and some charts on these. Here would be EUR versus USD, that's the euro and the US dollar. USD JPY, as I already said, that's the United States dollar versus the Japanese yen. The gold British pound versus the United States dollar. Okay, the US dollar versus the Swiss franc or the Swissy. The gold British pound versus Japanese yen. These are just a couple examples. So EUR USD, USD JPY, GBP USD, and you will hear, as you become familiar with the nomenclature of our industry, as you become familiar, people will elaborate these. They'll say EU, or they'll say GU, or they'll say GJ, or whatever. And those are just sort of abbreviations to help you know what currency pairs that they're looking at. So if you're deciding that you want to learn how to trade, right? You're wanting to learn how to trade for a reason. That reason is usually so that you could profit, so that you can make money. And so a pip is important for us to understand, because a pip is how you make or lose money in the market, okay? So a pip, simply stated, is that it's a percentage point in profit. So for those of you who can see me on the video portion, what happens is, if you had an entry point into the market, okay, let's say you entered here, okay, and you wanted to go in a buy, meaning you wanted price to go up, okay, each percentage point in price that moves up is a pip. And every time a pip goes into profit or goes the direction of the trade that you think is going to happen, you are potentially in profit. Now, the first thing you have to do is cover the spread of your broker. So I don't want you to be surprised when you immediately put in a trade and your trade is immediately in the negative, because that there is how the brokers get paid. And the brokers are there to help you leverage them so that you can get into the foreign exchange market and make money. And so we don't mind if they make a profit. We just don't want their spreads to be huge, because it makes it more difficult for us to profit, okay? So low spreads and low fees are what we're looking for our broker. And what happens is, once we cover the spread, usually about a pip is usually what the spread is. Sometimes it's 2, right? Once you cover that spread, your trade now moves into profit, okay? And so that's what a pip is. So if you hear people talking about pip life, pip, hooray, all the pips, nothing but pips, all kinds of pip talk, that's what they're talking about. They're talking about getting a percentage in profit. Now, the same thing happens if I expected a buy and the price goes down, that's a percentage into the negative. which means my account now is losing money in that particular process, okay? So what is your lot size? And we'll come back to this again. So your lot size is simple, not much explanation, but it means is how much are you trading, okay? So for instance, each lot size magnifies the amount of what's being done in the market. So let me give you an example. So just to give you an idea of how that might work. So with our lot size, if we were trading a 0.01, and we were to get 10 pips, that means that that 1 cent would now turn into $1 for most currency pairs, okay? So it continues on the same ratio. If it's a 2-cent lot size, it would turn into $2. If it's a 5-cent lot size, it would turn into $5, right? If it was a 10-cent lot size, it would turn into $10. Okay, you get the point, right? If it was a 25-cent lot size, it would turn into $25. If it was a $1 lot size, it would turn into $100. Okay, this is per 10 pips. So this is why the foreign exchange market is so powerful, folks, is because people are able to leverage smaller amounts of money to enter the market. And they're able to turn that into real profits. Now you say, Andre, real profits, I made $2. Well, if you had a $100 account and you traded or risked 2% of your account on a trade and you made $2, okay, and you made $2 in profit, now you have $102 in your account. That means that you grew your account by 2%. Folks, if I told you what 2% per day did, it would blow your mind. So I don't want you as a new trader to be upset because you'll see experienced traders who are trading the dollar lot size, the $10 lot size, and they're making $100, $1,000 on the same trade that you entered and you only made $1. The point that you should be excited about is that you were in the exact same trade in the exact same time, which means that you're understanding the market like someone who could trade a dollar lot size, someone who could trade a $10 lot size, someone who could trade a bigger lot size. You're understanding the market like them. It's just that your account hasn't grown enough to support trading that large of amount of money responsibly. And so that's what makes this thing so brilliant, is you could literally be taking the same trades as professional traders and still profiting, and you can know that, hey, you're doing the right thing. You're learning the skill set, and your account will continue to grow as long as you continue to compound it. Okay? Compound interest is beautiful. So that's what your lot size is, and we'll have a little highlight of that in a minute. Here it is. So in your lot size, when you go onto your phone, when you decide, or when you go into, this is your MetaTrader 4 on your phone, and I'll show you this when we do a live example here in a second. What happens is, right, what happens is you're going to go in and right under this section that says market execution. So market execution is very simple. What that means is that once you press the buy or the sell button, at that point, okay, you are now entering the trade right then at that moment. You're not setting a pending order, which means that when price hits a certain point, it's going to activate the trade. What you're saying with market execution is, right now, I'm in. I see what I see. I'm going in for the trade. Underneath that, this is how it looks on an iPhone, folks. You have this section right here that says lot size. That is your lot size. In this case, you would have been trading a 0.01, which is 1 penny. It could be a 1.00, which is $1. It could be a 10.00, which is $10. It could be a 0.10, which is 10 cents. You're going to trade a lot size that matches your account. What we generally recommend is that for every $100, you trade 0.01. So in that case, if your account was started with $1,000, okay, you would be trading 0.10. Okay, there's different scenarios in which you could potentially safely increase these numbers, and it has to do with your risk to reward reward ratio, and the percentage of your account, which we never want you to risk more than 3% for a new trader. And so that has to do with where your stop loss is placed. Okay, so there are scenarios where you could increase this lot size. It would probably be a little more advanced discussion, but what this says, okay, what this says, if I'm risking 3% of my account and I had $100, my lot size is 0.01. If I get 10 pips, that's $1, right? $1. So that's 1% of $100. So in this case, if I was risking 3% of my account, that means that I could risk a 30 pip stop loss. So stop loss, and we'll talk about it in a second, means that when if price goes the wrong way, it's going to hit a point where you say that's the most I'm going to be willing to lose, and it'll automatically knock you out of the trade. So in this case, your stop loss at 3% would be 30 pips. Why? Because 0.01 times 30 pips would equal $3, and $3 is 3% of 100. And so that math might have gone over people's head right away. I can do it in my head at this point now. I couldn't always do that, but it becomes easier over time, okay? If you notice down here, you'll see that we have price, and this is between the difference of the price is the spread. So in this particular case, there was probably something crazy going on the market because that's like a 19 pip spread. That's way too much. You wouldn't want to enter the market. It's probably during what they call a swap. All right. So let's see here. So leverage, you're going to hear us talk about leverage, but what we're talking about right here is leveraging with your broker. We recommend a 1 to 200 relationship with your broker. You can choose to do what you want to do. This is I won't even say we recommend. This is my recommendation, 1 to 200 leverage with your broker, okay? What we do want you to know is greed can cause over leveraging, and that has to do more with your leverage and your lot size into the market. When you become too greedy, the market will bite you back, okay? And so it's very easy for people to get greedy. One of the ways in which you can prevent that is not only just by setting goals, but also having a trading plan, okay? So one of the things, we don't have time to go into this in this basic day-to-day, but we probably will cover it in the future, is how to set up a trading plan. Now, for those of you who are brand new, if you go back about to around July 4th weekend on my Facebook page, there is an event called Freedom Ain't Free that I did, and I streamed it live. Freedom Ain't Free, okay? You can also go to Legacy Worldwide Leaders. I'll put that on here too. Legacy Worldwide Leaders, I believe is .com. And what'll happen is when you click on that, it'll take you right to our YouTube page where you can also see this event, Freedom Ain't Free. Now, in that event, the very first speaker, besides my beautiful face, but the very first speaker that you'll see is someone named Lillian Okado, okay, out of Kenya. Beautiful sister out of Kenya. The very first part of that powerful event, which I recommend you watch the whole thing, but it is on how to develop trading mindset and a proper trading plan, okay? Lillian Okado is a master trader out of Kenya. She helps call trades on our Vibrata platform for the Academy, where literally there is tens of thousands of people who could potentially take the trade ideas that she offers up every single day on that platform. She is very good at what she does, and she broke down the idea of a trading plan masterfully for you, better than I could do it. And so if you want that information, that's where you go get it. Again, entry-level stuff. We're trying to help you guys out. We're helping you, brand new trader, okay? Real quick, let's talk a little bit. Well, maybe I'll be able to get to it in a second. If we don't, we'll come back to it. We're going to come back to the idea of leverage. I'm going to go ahead and write that down. And over leveraging, leverage. Okay. A couple other things that you'll want to do is you'll want to definitely, when it comes to leverage, you'll also want to do these for news related stuff. I think I saved that for the end, but you're definitely going to want to get some kind of financial news and what's going on in the market. But one place that you can go is My FX Book. And this will be an important site for you just to help you understand leverage if you can't do the math yourself. As you go to My FX Book, you go ahead and click down on here, and you should have Forex calculators. When you go on Forex calculators, you're going to click on position size calculator, and that's going to bring you up here, and it'll allow you to be able to enter the amount of money that you have, what you want to risk, and it'll tell you what your stop loss should be, how many pips your stop loss should be. You should be using this as a new trader because you should never blow your account, folks. I know this is hard to understand, but if you're following the way the academy teaches you, you will never blow your account unless you're trading indices and stuff like that, and you don't know how to get your trade modified quickly enough. Sometimes that can happen. But when you're trading regular Forex pairs, let me say this, you should be trading with a stop loss. If you're not trading with a stop loss, you could blow your account. News could drive your trade a different way. There's all kinds of economic factors that could happen. If you're trading a stop loss, you enter your trade, you modify your trade, you put your stop loss in. The most you will ever lose on any one trade is 3%. So if you lost 3%, that is something that you could get back, right? In the next trade or a trade after that, or maybe it takes you 2 trades to make that up. Whatever it may be, you can make that back. But if you lose 77% of your account, how hard is that to make back? If the broker has to close your trade out because you didn't run a stop loss, how hard is that to make it back? This is an important lesson, folks. This position size calculator, 3%, especially when you're brand new, is going to help you through the process, okay? So what is TP? You'll hear this talked about all the time. TP just stands for take profit. It simply means that you entered a buy or a sell, whichever one you entered, and that price, remember those candles that we talked about? Price moved up to the point that you determined that it would go to. So when you modify your trade, and we'll show you how to do this, it put in a take profit, you put in your stop loss, and what happened is price continued up and it hit the area which you determined that you wanted to take your profits and put it in your bank account and get out the market. So just like you have a stop loss that says, hey, listen, if it hits here, I don't want to lose anymore. You have a take profit that says once it hits here, it's going to take me out of the market. Even if the trade continues further in the direction that you put it, it's going to go ahead and take you out. You take your profits and be excited, okay? Same thing I told you already what a stop loss is. Stop loss, again, is to prevent you from losing, okay? It's going to prevent you from losing. Now, initially, when you have a trade, and let's say you're going in for a buy. Let's say this is your entry, and you're going in for a buy, okay? You're going to have, say, a take profit somewhere up there, and you're going to have a stop loss somewhere down here, right, where you don't want the trade, because if the trade goes in a downward direction and you wanted it to go in an upward direction, you're losing money, okay? And so what happens is you have a stop loss to knock you out. But as the trade goes into profit, you're going to learn to take this stop loss and move it up and put it into profit, so that even if the trade turns around before hitting your take profit and goes the opposite direction, the trade will knock you out in profit, and it becomes a risk-free trade. Very important skill to learn as a trader is how to get your stop loss to break even or into profit, so that if the trade reverses for whatever reason, you still make money or don't lose money. Your number one job as a trader is not to make money. Your number one job is to protect your capital. Protect your capital. So the more often that you can get your stop loss. Now, I don't want you waiting till it goes 2 pips in profit and then moving there. You have to trust your analysis. You're going to have to trust the people that you're working with. You're going to have to trust the trainers and educators within IM, but they will give you an idea of when you should move. And as you begin to work with them and understand the strategies, understand what we're doing, you will feel comfortable about when you should move your own trade. But moving your trade and moving your stop loss is an important skill to develop. All right. So here we go. This is just a simple example. Again, we're just giving you guys the basics, folks. This is free game, bro. Let me tell you, people pay a lot of money for this basic information that we're giving you because of how much money could potentially be made in Forex. So here's what happens. In a buy, so let's again, you entered the market here. We're in a buy. So if we're in a buy, we're expecting price to go up, correct? And so in a buy, your take profit is always above your entry point, okay? And your stop loss is always below your entry point. Does that make sense? Because in a buy, we're expecting, so as price moves up, all this way, we're in profit till we hit our take profit, it knocks us out the trade. If it goes the other way, we're in the negative. We're losing money, and it'll hit our stop loss and knock us out the trade. In a great scenario, if you were to measure your buy to take profit or sell, whatever, the point from your entry to your take profit should be a lot longer than what it should be to your stop loss, okay? This is called that risk to reward ratio. So let's say I'm risking 30 pips, right? But if my trade hits TP, I'm gonna gain 120 pips, okay? So I'm risking 1 in order to gain 4. That ratio right there will make you a winner in the market. You can lose more than you win and you can still win. It's incredible, all right? So this is an important lesson to understand. So in this case, if I'm in a sell, I'm expecting price to go down. My take profit would be down here. This is hard for new people to understand when they enter the market because they are familiar with stocks and you always want price to rise. In the foreign exchange market, price can go down. If you decided that price would go down, you make money as price goes down. So if you remember back in, I think it was like February 20th, the stock market went boom, crashed. It reacted to what was going on in the world, excuse me. And all of a sudden, you had a lot of people who lost a lot of wealth in the stock market, but Forex traders were dancing up and down. They were so excited because price was moving so aggressively, and they ended up making a lot of money in those drops, okay? So again, this is your entry price. You have your take profit there. And over here, let me see if I can, give me 1 second, folks, get these off of here. And then over here, you have, excuse me, over here would be your stop loss. Now, so this case, because you're in a sell, your take profit is below and your stop loss is above, okay? Hope that makes sense. You can always go back and review. So when you're entering a trade, this is what gets a lot of people, but you're always gonna focus on a couple things, but most of the time you're going to get rid of the last digit. So here's what happens. The reason why people like to trade the JPY is because it's usually just 3 numbers after the decimal, or it's 3 numbers after the decimal. It's not usually, it is, okay? And so what happens is when you're trading, it's not as difficult as people think to count pips, but it's important to learn how. So what happens is if you have price here, and like I said, it was 144. I'm just making it a little bigger for you guys, 5.6. When you're counting pips, this point right here, that's 6, we're going to temporarily discount it. We're going to get rid of it, like move it to the side because it's called a pipette. And what you're counting when you're counting pips is you're counting these 2 numbers here. This is on JPY, okay? So in this particular case, if we wanted our take profit to be 10 pips above, because we're in a buy, we would go 144 and it would go 144.55. Why? Because 45 plus 10 becomes 55. Does that make sense? So 45 plus 10 becomes 55. If I have 45 cents and I add 10 cents to it, I have 55 cents. Then what you're going to do is you're going to take that little pipette that you set to the side and you're going to put it back. So it becomes 144,556. Now, if I was going to subtract 10 pips, I would take the same thing. If my TP was below, right? If I wanted to have my TP below, again, TP being take profit, and I was doing 10 pips, it would be 144. My starting price was 45. So 45 minus 10 would be 35. And then I'm going to add the pipette back on, right? If I have 45 cents, I give away 10 cents. What do I have left? 35 cents. Simple, right? So it's not as hard to do as you think. The same principle works for your stop loss. So again, if I was entering here, let's take that trade, 144.456. Let's say I wanted my take profit to be 30 pips above. So take profit, 30 pips above. So what's 45 cents plus 30? So it would become 144.756. That would be my take profit. If I wanted my stop loss to be 15 pips, let's say, what's 45 minus 15? It would be 144.306. Now you have your take profit and your stop loss. Once those things are entered, you don't have to stay staring at your phone, folks. You're good to go. All right? You're good to go. I hope that makes sense. So here's what we're going to talk about how to modify a trade. What I'm going to simply do is just actually probably jump on in a second and show it to you. But again, what you'll do is once you hit market execution and you end up hitting into the trade, what will happen is you'll go to the trade that you want to modify. You'll literally hold down the button on your phone. It'll pull up. You click modify and it'll allow you to put in your stop loss and your take profit. Okay? Stop loss and your take profit. Real quick, as an example here, just to let you guys see, is that right here, when you're in the negative, you'll be in the red. If your trade is in the blue, that means you're making money. And so you'll hear people talking about all blue weeks, or we have blue is blue, we're in blue. That just means they're in profit. Blue equals profit. We're making money, okay? So you'll hear that. Deep blue, we're deep blue, we're in blue. That's what they're talking about, making money, all right? Again, this here give you an example of Android. Okay, so when you enter on an Android, it's showing you your market execution again, showing you your lot size that's circled. On the left side is where you would put your stop loss. It has a little red tint underneath there, and over here on the right side, you see a little greenish yellow tint. That's where you're going to put your take profit. Okay, so Android's a little different, but you'll be able to see how that looks on an Android for your buy or your sell. All right. Just wanted to show you another term of the market real quick. So price has a habit of doing really just one of two things. Price is either moving up, it's moving down, it's moving sideways. When it's moving sideways, sort of in this zone like this, it's called consolidation. Most traders, especially new, are not looking to trade a lot into consolidation. They're looking for periods where price is moving. So you'll want to get back with your educators and do that. But consolidation can also be profitable for you if you know how to trade it. So just giving you an idea so you guys got a little bit of terminology. All right. Another thing that you'll have terminology wise, again, brand new traders, first couple days, these are 3 simple terms basically that you can learn. We learn consolidation, okay? You have resistance, which it says here beautifully for you. So if you notice on the chart here, that price on these candles was moving up, 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 up. It would hit a certain area above it, and then it would immediately retrace. Another area, retrace, retrace, retrace. In other words, price was having a hard time going through that zone. What that usually means is that that is what we call a resistance zone. And that is partially how you'll set up trades, is knowing where your support and resistance zones are. On the bottom, same idea, except here, price is coming down. It's called support. It touched here, bounce back, touched here, bounce back, touched here, bounce back, touched here, bounce back, bounce back, bounce back, bounce back. So what you'll see there is that becomes a support or the floor, okay? Price struggling to go below that area. So these areas are very common terms within traders. They're called support and resistance. And it's something that you should have an understanding of, even if it's just a rudimentary understanding as you begin to start your process of trading. The other thing that you have is trends, okay? I'm not going to go through the actual full defining of a trend in terms of higher highs, higher lows, that type of stuff. I don't want to make this too confusing, but usually what you do is you can see a trend is basically, this is an uptrend. The market is continually moving up, okay? Then you have a trend over here where you see it's a downtrend where market and price has continually moved down. Understanding how to mark these trend lines, these are called trend lines, will be something that you can learn pretty quickly. But understanding the trend of the market. Why is that? Because the trend is your friend, okay? When you can trade with the trend, you're in good shape, okay? Counter trend trading is something that can be done and can be very profitable, but usually it's very experienced traders that do it. Okay, folks, I've actually been on an hour and a half. I didn't realize we were going that long. Oh, no, it's only been an hour. Okay, sorry, I stopped my start time, but we're still gonna finish up really quickly here. Wanna make sure that you guys got the basics. The other thing I told you is that you wanna pay attention to news. So there's a site called Forex Factory. You can also go to that My FX book. But on Forex Factory, there's two little things that you wanna pay attention to. The calendar. Okay, the calendar on each day will tell you sort of the important news that's coming out. If it is a red folder, that means that that news has a high likelihood of impacting that currency pair. If it's an orange folder, it's medium impact, and yellow folders are minor impact on the currency pair. So that's something that you should do every day, just so you know. Most people don't recommend trading right up on the news, so you can just check that out. And then also, if you see the news tab, it will tell you some of the news that's affecting currencies around the world in terms of breaking stories, stuff like that. All right. So that right there will end the slideshow there. What I want to do real quick is just do one last thing, which is take you guys in and show you a live example real quick of, okay, let me see. I got to adjust this. I got to take you in real quick and show you an example on the screen here. Let's see what we got here. Uh-oh, did we not share? All right, hold on one second, folks. I messed up the process. I messed up the process, my bad. My bad. What I wanted to do real quick is just show you a live trade so you guys can see how that works and just see some of the functionality live. All right, give me 1 second. All right, so what we're gonna do is share the screen here. We had a moment. I moved, I think, a little too fast for it. All right, so now we have our screen here. Okay, so here we have right now, you'll see we actually have our phone pulled up here. You actually see the market. On the left side, what you have is a ton of different currency pairs that are going on. You can see down there, I have XAU, USD, that's gold. You can have Bitcoin. You have a whole bunch of different currency pairs. And if I wanted to trade any one of those currency pairs, I would just click on it. I would go ahead and select trade. And it's going to allow me now, as you see, to potentially enter the market. It says market execution. The currency pair is gold, British pound, USD. I would be trading a 1 cent lot size. and you can see what price is at currently. You'll notice the difference between 51.2 and 52.6 means that my spread is a little more than a pip, but that's giving you an idea of what's going on with the market. Now, when you come back here to the chart or the quote screen, on the bottom there, I'm on quotes. Again, you'll see that the numbers are moving. The market has really just opened for the day, so it's kind of moving a little slow right now. But if I wanted to, any currency pair, let me go back here. I can click a currency pair again, go British Pound USD. I can hit chart, and that's going to show me the chart and what's happening on that particular currency pair. Again, don't worry about the indicators. You see that it's in candlesticks. The M1 at the top means that I'm on the minute chart in this particular scenario. I can go to the 5-minute chart. I can go to the 15-minute chart. I can go to the hour chart. You see how the chart changes based on the time? Because if you think of it this way, if I'm on the 1-minute chart, each one of those candles is 1 minute in time. If I'm in the 5-minute chart, the current candle that I'm on is the sum total of the previous 5 minutes, right? So very simple to understand. As you move through the charts, you can move out to the daily. And what this does, again, is allow you to understand and help you get into the market. Now, this is on my phone, right? So we're looking at this on my phone. So the other thing that you did, if you wanted, again, let's say we're going back here to this particular currency pair. We're going to collect trade. So we're on this particular currency pair. I've done no analysis, not even looking at it. Let's just say sell. I don't know, right? So now I'm in for a sell. And you see right there that my trade was immediately negative. Remember, because I said it's about a pip and a half. So that's about 15 cents or so. It was immediately in the negative. It shows my entry price, okay? And it shows what's happening with the trade. Now, if I want to modify this trade, I'm going to go ahead and hold it. And you see it came up. It says close, modify, trade chart. So I go to modify. And so in this scenario, I was in a sell. So let's say I wanted to make my take profit. I'm going to go and make it 126.408. Okay, minus 10 pips. And I'll go ahead and put my stop loss at 126.548, whatever. Okay, so I'm just showing you how to modify it. I click modify, and now my trade is there. Now you see my trade is a little bit of profit, but it hasn't fully covered the cost of the broker yet. That's why you see my trade still says red, but once it fully covers that, this whole thing will turn blue. My trade is now in profit, folks, as we speak. If I wanted to, I could go ahead and I can go directly to close, and it'll close my trade out, and boom, I can close my trade out, and I just made 28 cents right in front of you. Now, 28 cents isn't much, I understand that, but we are just talking about a quick trade. I did no analysis, and I'm just showing you how to use the device. So when we say that we're making money as traders from anywhere in the world, as long as we have a Wi-Fi connection, okay, and a smartphone, this is what we're talking about. You can literally get on your phone. You could do an analysis on the chart of which way price might be moving based on your education, okay? And then you can enter a trade. Put in your stop loss so that you don't have to worry about losing more money than you were willing to risk on that trade. And boom, put in your take profit and go on about your vacation day. Do whatever it is that you're doing. Maybe you want to get up a couple minutes early in the morning, right? And you want to go ahead and say, let me enter a trade before I go to work. I'm going to look at my charts. I'm going to mark it up. I'm going to spend about 30 minutes, and I'm going to identify 1 or 2 trade setups, and you're going to enter the market based on that. So folks, that right there is essentially how you can do a trade, take a trade, etc. I hope that made sense for you. I hope you got some kind of benefit out of that. I'm about to wrap up. I appreciate your time. Let me see something real quick. I didn't get much over here onto this. I did see it. I see a comment or two. Let me make sure. See something real quick. Boom. I didn't get much over here. All right. We got that done. Okay, folks, we are done. We're going to close out. Thank you for your time. I hope this gave you some benefit. some of you guys, maybe a refresher, maybe this was just some info that you needed. Again, if you have questions, feel free to get back with me. Feel free to ask a question. Let me help you learn this skill set so that you can begin to do some of the things that you want to do. I'm excited to have shared with you. I'm thankful. Here's my beautiful baby girl. She's my reason why I trade, because I get the chance to be a full-time dad, even though her hair is a little messy for live. Mommy's going to see this. She'll be upset, but it's okay. It gives me that opportunity to spend time with her. And so I'm thankful. I'll talk to you guys later. And thanks again for your time.
Bye.
Bye.